And joining us now from Montreal to discuss the deteriorating unemployment picture in the Eurozone and what it means for the region's economy is Domenico Lombardi. He's the director of the Global Economy Program at the Center of International Governance Innovation. Domenico, thanks for joining us tonight. Let's get straight into it. Unemployment in the Eurozone, thank you. Unemployment in the Eurozone hit a fresh record in April of 12.2%. Retail spending is also on the decline in the bloc's largest economies. So does this dash any hope of the region returning to growth anytime soon?
That's absolutely correct. The data you mentioned essentially tells you two things. First, that the crisis, once financial, has become deeply entrenched in the real economy of the Eurozone. And secondly, that more than a recession, this is really a depression, because the 12% average unemployment rate really masks important regional differences. In Greece and Spain, the unemployment rate is getting closer to the 30% threshold. And clearly, if we look at the youth unemployment, that's even higher. And of course, with such a high youth unemployment, there cannot be any reasonable prospect for growth in the medium term unless there is a drastic revamping, a drastic overhaul of the Eurozone policy framework.
Well, you mentioned these deep divisions, as we can see on the chart there. Germany and Austria at around 4.9%. Austria they're doing the best. Germany 5.4%. And as you say, Spain and Greece at around 27%. So how much of a role does austerity play here?
Well, clearly there are some structural differences within the Eurozone economies. No doubt, the southern economies have been slow to embrace a structural reform agenda. However, the policy response that the European authorities have sort of recommended to the southern economies, no doubt has further exacerbated an already very painful situation. If you take the case of Italy, the debt to GDP ratio of Italy was 120% a couple of years ago. Well, this year, Italy will have a budget close to balance, almost perfectly balanced in structural terms, yet the debt to GDP ratio is higher than 10 percentage points, and Italy has lost 7 percentage points of income since the crisis started. So this is
Domenico,
to say that certainly there are issues.
The situation is clearly not good. It's bad. We can cite lots of figures. The bottom line is, what does the ECB need to do? Mario Draghi said recently that he will do whatever it takes. What is he waiting for? And how much worse does it need to get before we see some real action out of the ECB? Does it need to do more than just cutting interest rates at this stage?
At this stage, even a further interest rate cut is not going to do any good to the southern economies, because simply put, lending is not flowing to the business sector. Banks are simply not lending to firms. And because firms cannot borrow from banks, they cannot hire, they cannot fund their investment plans. So what is needed is a more comprehensive plan articulated along the following pillars. First, the ECB really needs to become more aggressive in ensuring that the money that banks get from Frankfurt does flow to businesses, to companies, to fund investments. And there are a number of options on that. Secondly, there should be less emphasis on fiscal adjustment and more emphasis on accomplishing structural reforms. Surveillance of the Eurozone should really focus on structural reforms, liberalizing the product market that generates jobs, further liberalizing the job market. And these are really the issues that the European ought to be discussing at the next EU summit at the end of June.
Okay, well, yeah, that's very right. At the end of June, June 6th, the ECB will have another meeting, actually. News came out today, so we will see what is discussed and what is resolved at that meeting. We're going to have to leave it there. Thank you so much. Domenico Lombardi, thanks for joining us, Director of the Global Economy Program at the Center for International Governance Innovation.